What is an Ethereum ETF and how does it work? Cryptocurrencies have revolutionized the financial world, with Ethereum being one of the leading names in this space. For those new to investing in cryptocurrencies, terms like Ethereum ETF might sound confusing. This article aims to demystify what an Ethereum ETF is and how it works, making it easy for newbies to understand and consider as part of their investment strategy. Understanding Ethereum. Before diving into Ethereum ETFs, it's essential to grasp what Ethereum is. Ethereum is a decentralized blockchain platform that enables developers to build and deploy smart contracts and decentralized applications, dApps. Unlike Bitcoin, which primarily functions as a digital currency, Ethereum's primary purpose is to facilitate programmable transactions through its native cryptocurrency, Ether, ETH. What is an ETF? ETF stands for Exchange Traded Fund. An ETF is a type of investment fund that holds a collection of assets, such as stocks, bonds, or commodities, and trades on stock exchanges. ETFs are popular because they offer investors a way to diversify their portfolios without having to buy each individual asset. They can be bought and sold like regular stocks throughout the trading day. What is an Ethereum ETF? An Ethereum ETF is an exchange-traded fund that tracks the price of Ethereum. It allows investors to gain exposure to Ethereum without directly buying, storing, or managing the cryptocurrency themselves. Essentially, an Ethereum ETF represents shares of a fund that owns and tracks the value of Ether, allowing investors to benefit from its price movements. How does an Ethereum ETF work? Here's a step-by-step explanation of how an Ethereum ETF works. Fund creation. A financial institution or fund manager creates the ETF and purchases Ethereum. This Ethereum is held in a secure wallet, and shares of the ETF are issued, representing ownership of the fund's assets. Trading on exchanges. Once the ETF is created, it is listed on a stock exchange. Investors can then buy and sell shares of the ETF just like they would with stocks. This makes it easy for investors to gain exposure to Ethereum through their regular brokerage accounts. Price tracking. The value of the ETF shares fluctuates based on the price of Ethereum. If the price of Ethereum goes up, the value of the ETF shares typically increases, and vice versa. This tracking allows investors to benefit from the price movements of Ethereum without directly holding the cryptocurrency. Custody and security. The ETF provider takes care of storing the Ethereum securely. This alleviates concerns about managing digital wallets, private keys, and the security risks associated with holding cryptocurrencies directly. Regulatory oversight. ETFs are regulated financial products. This means that an Ethereum ETF must comply with financial regulations, providing a layer of security and transparency that might appeal to traditional investors. Benefits of investing in an Ethereum ETF. Ease of access. Investors can buy and sell Ethereum ETFs through traditional brokerage accounts, making it easier for those who are not familiar with cryptocurrency exchanges. Security. Since the fund manager handles the storage and security of the Ethereum, investors don't need to worry about securing their digital assets. Diversification. Ethereum ETFs can be part of a broader investment portfolio, allowing investors to gain exposure to cryptocurrency while still holding traditional assets. Regulation. As a regulated financial product, an Ethereum ETF can offer more peace of mind to investors compared to directly buying and holding cryptocurrencies. Potential drawbacks. Fees. ETFs typically come with management fees that can reduce overall returns. It's essential to consider these costs when investing. Price discrepancies. The ETF's price might not perfectly match the price of Ethereum due to market demand and supply factors affecting the ETF shares. Limited control. Investors in an Ethereum ETF do not own the actual Ethereum, which means they cannot use it for transactions or benefit from staking and other Ethereum-based activities. Conclusion. An Ethereum ETF is an accessible and secure way for investors to gain exposure to the cryptocurrency market without directly handling digital assets. By understanding how Ethereum ETFs work, newbies can make informed decisions about incorporating these financial instruments into their investment portfolios. As always, it's important to do thorough research and consider your financial goals and risk tolerance before investing.